Hey everyone, welcome back to Corporate Decoder, the place where we decode the language of business. Today we are diving into TechTarget's latest filing, and let me tell you, it's a bit of a roller coaster filled with delays, accounting issues, and a potential threat to their stock listing. Buckle up because this could get bumpy. TechTarget, a company that provides business-to-business marketing and sales services, has had a few problems recently. The big news is that they couldn't file their annual report called a Form 10-K on time. This is like missing a major deadline at work, and it can have consequences. Because they didn't file on time, the Nasdaq stock exchange sent them a letter saying they are not following the rules for being listed on the exchange. One of those rules is that companies have to file their financial reports on time. Nasdaq gave them some time, about 2 months, to come up with a plan to fix this. If Nasdaq approves their plan, TechTarget could have up to 6 more months to file the report. TechTarget had already said that they wouldn't be able to file their report on time because they needed more time to look at their internal controls, especially how they handle the money side of things. This involves some tricky accounting issues related to when TechTarget joined with Informa Tech Digital Businesses last year. They thought they could file within the 2-week extension period given to them, but that didn't happen. The company needed even more time to sort out some problems with how they were evaluating their internal controls, to make sure their accounting matched both US and UK standards, and to figure out some complicated accounting issues about things that aren't cash, like how much their brand name is worth. And there's more. The company's audit committee, which is a group that oversees the company's accounting, found some mistakes in the past financial statements of Informa Tech Digital Businesses. These financial statements are what investors use to understand how a company is doing. The audit committee decided that people should not rely on these previous financial statements. This means those past reports have errors and can't be trusted. The errors had to do with how the company handled things like how much their brand name is worth, changes in how much they owed if certain goals were met, and the writing off of some intangible assets, including the tax effects of those. The company also found other errors from previous periods that needed to be fixed. TechTarget will fix the errors by restating the old financial statements in their upcoming report and in future reports. This is like redoing the math to get the right answer. Also, the company found some weaknesses in how they control their financial reporting, and they're working to fix those too. The company also issued a press release, like a public statement, to announce that they had received the letter from Nasdaq. So what does all of this mean? Well, TechTarget is facing some challenges right now. They are working to file their annual report as soon as they can, and they hope to get back in good standing with Nasdaq. But there's no guarantee that they will be able to do so. And now let's step back and take a broader look at TechTarget. On the one hand, the company's stock might take a hit. If investors lose confidence, they might sell their shares, driving the price down. Also, TechTarget is spending time and money to fix these accounting issues, which could affect their bottom line. On the other hand, TechTarget is taking these issues seriously and working to correct them. If they can successfully file their report and fix their internal controls, they could come out of this stronger. Also, the underlying business of TechTarget may still be solid. They provide valuable services to businesses in the tech industry, and that demand may continue to grow. In conclusion, TechTarget is facing some short-term challenges, but their long-term prospects are still uncertain. It will be important to watch how they handle these issues and whether they can regain the confidence of investors. Thanks for tuning in to Corporate Decoder. If you found this breakdown helpful, give us a like, leave a comment, and subscribe for more insights into the world of corporate filings.